Hello, I'm Lelda Smith for the Finance News Network, and joining me from the Pengana Global Resources Fund is Portfolio Manager Tim Schroeders. Tim, welcome back to FNN.
Thank you, Lelda. Pleasure to be here.
Pengana Global Resources Fund provides exposure to global resources stocks. With so much to choose from, what's grabbing your attention at the moment?
So what we're ideally looking for are companies that can think outside the square, have projects that are robust, able to withstand highly volatile commodity prices, and more importantly, able to access capital and deploy capital efficiently through good management.
Now, the fund invests in global mining, energy, steel, commodities and associated services sectors. How is your capital allocated between each?
We've got roughly about 20% allocated to energy, oil and gas at the moment, and that over the past 12 months, 24 months has provided pretty good returns, but we're seeing the game change, whereas metals and mining has been much of a laggard given a backdrop of challenging commodity prices with falls in the bulk commodities such as coal and iron ore. Copper's been a little bit disappointing as well, and we've seen a big sell-off in gold last year. So it is challenging. We've still got sectors that we avoid. I think coal's extremely challenging at the moment, so we have a small coal exposure there. Gold, we're underweight, but we're increasingly confident about some of the base metals, particularly nickel and zinc.
Pengana Global Resources Fund holds both long and short positions. Could you give us an example of a stock you're long and detail where the appeal is?
Yeah, we own a stock a bit outside the normal in terms of it's a potential potash producer called Highfield Resources. It raised capital in the last couple of months. It's got a very exciting project that it's trying to develop in Spain, near Pamplona in Spain.
And are there any other stocks you could highlight?
A really nice opportunity that we've seen recently and we've invested in is Phoenix Gold, which has a Castle Hill project just outside of Kalgoorlie. And over the next 6 months, it's going to move from developer to producer, and importantly, not with a lot of capital being expended, which is exciting for us.
So which stocks have supported your performance over the last quarter, and what's most attractive about those companies?
Performance has been pretty good. We did about 4.2% for the quarter. Oil Search was one of our bigger positions, which did around 14% return for the quarter. The main fill-up there was it successfully bringing its PNG LNG project into production on time and on budget. And that changes the cash flow dynamic for this company dramatically from absorbing a lot of capital over the last few years to generating very strong production and cash flow growth. So that's been pleasing. And a smaller company that we've had really good success with over the last quarter was Liquefied Natural Gas Limited, which the share price was up threefold in the space of a quarter. And interestingly enough, it's been an area of the market in terms of those smaller cap resource companies that have been unloved, but selectively we're seeing very good opportunities, and LNG was one of them in the past quarter.
Now, Tim, you've mentioned Oil Search and liquefied natural gas. How long will you continue to hold on to these positions?
Liquefied natural gas, LNG, we actually liquidated our whole position during the last quarter, despite the price rise, and the company still remains very well positioned to grow its share price and ultimately develop into a cash generative business. But we've seen this company grow from a market capitalisation of less than $100 million when we got first invested in the company to a market cap now in excess of $1 billion. We've just taken our money off the table, continue to reassess the situation, and won't be surprised if we come back in at a later stage. Oil Search, we're long-term happy holders at this stage. We continue to see good upside for the company, and it's just on the cusp of going through a strong cash generative phase.
Finally, Tim, the S&P ASX 200 index has climbed higher this year, but many resources have suffered. Where are you looking for opportunities?
We're looking away from, I guess, the China-centric type commodities and producers that have served investors well over the past. We're not avoiding them, but we think that there are new exciting areas, and I think areas such as lithium, such as graphite, Those types of areas are interesting, and we continue to explore ways and means of investing outside the so-called traditional type environment, because we think that they're under-researched and we do have a competitive advantage in identifying and investing in those first.
Tim Schroeders, thank you for the update from Pengana Global Resources Fund.
Thanks, Laura.